Bitcoin has dropped from $80,000 to $60,000. It is trying to break through that support range as well. Whales are absorbing the price impact currently, but will it last long enough? I think that a lot of people right now, when talking about Bitcoin or crypto in general, they never try and deep dive to understand why the actual sell-off happened so they could predict the next one or front run it, like I did with my previous thesis. A lot of people just see the negative numbers and then instantly switch to negative sentiment, or they see positive numbers and they literally switch to positive sentiment. Today, we are going to be uncovering the reasons why Bitcoin has dropped from $80,000 to $60,000 in the first place, and why it is probably most likely going to be continuing to go down and drop even further. So, as taking a look at the Bitcoin chart right now, we can see that from May 12th, actually, we had peaked and we start to drop off all the way to reaching $58,000. Now, my thesis on why I covered the price action, why I have been telling everyone that we are going to be going down, allowed me to enter this trade right here and earn over 1000% profit on this exact trade. I'm going to be uncovering why I have started to switch bearish from this standpoint right here, and why this price movement down even happened all to start with. So the first reason why is Kevin Warsh. Nobody really talks about what is going on right here. Kevin Warsh is the new fetcher. He's the new guy, and he is literally saying the most hawkish or bearish statements that are possible on the human planet. And he's not talking about rates might just go up a little type stuff, right? He's actually the head of Fed, and he's walking in and saying that he is going to be playing an entirely different game than Jerome Powell did. And every single crypto YouTuber is out here blaming Iran, blaming Trump, blaming who knows what for whatever's trending, right? And none of them are connecting it to the fact that the new Fed chair's hawkish words are literally going to be driving the rates up or holding them steady. Most likely, we won't be having any rate cuts. Surely not. And those, of course, constricted liquidity conditions are going to be restricting Bitcoin's price moving up, right? So that's just one of the first points that nobody is talking about. You gotta understand that this guy is literally going to be playing an entirely different policy. He is going to be driving different standards as the new Fed chair, right? And he is the biggest hawk in the room. Now, on June 17th, we did have a FOMC meeting, and the meeting came out that we are going to be holding rates at 3.5 to 3.75% for hold in a row. But what's more important is that this was Kevin Warsh's first meeting as a Fed chair. The rate hold itself was already priced in and nobody really cared about it, but what actually moved the markets was the projections that came with it, because his speak was straight up hawkish, and of course, it triggered a real risk-off move across global markets, not just crypto. So this is a recent catalyst that you can point right now on why Bitcoin has started to fall. Now, the next thing that all of you need to understand is what important role do US Treasury rates play in? Because when we have ETFs, right, ETF investors aren't just some stupid retail which are headline driven, right? They are calculated people. And regulated capital, so pension funds, allocators, whoever's paying or moving the ETF money, they live and die by interest rates. Bitcoin pays you zero yield, and treasuries right now don't, because as you can see, the yields on treasuries are inflated, some at all-time highs. So when you see outflows, you're not watching people just panic selling because they saw a scary war headline or some bullshit like that. You're watching most likely a calculated fund manager run the numbers and just simply reallocating. It's boring, but it's actually what's happening. And you gotta understand that people are moving billions through these ETFs, and they will never be scrolling Twitter and seeing a headline and basing their trade off of that. They run spreadsheets, they run funds, and Bitcoin is paying zero, while this is paying profit. Now, the next interesting point is that the money that is running away from Bitcoin actually didn't run to cash. Everybody's saying that the money left crypto and it's hiding somewhere right now, but it's not hiding anywhere. Basically, most of the money actually just reallocated towards the S&P 500. As you can see, S&P smashed through all-time highs very much recently. And you know what's driving that? Well, AI stocks, semiconductors. That is where the real trades are happening right now. So the same money that came out of Bitcoin ETFs is moving back into stocks and AI, and a huge chunk walked in straight into Nvidia and the whole AI trade. And it's honestly not surprising, because why would you be holding a bleeding asset when you see something right in front of your eyes moving up so quickly? S&P has locked in a 20% growth past year, which is honestly mind-blowing. Now, nonetheless, a lot of money actually was just simple profit taking. As you can see, here we have an article on Bitcoin's 3.4 billion ETF bleed looks more cyclical than structural, and it's covering what kind of selling this is. So the crucial read on the record outflows is that this wasn't panic selling, it was rational profit taking accelerated by a changing macro backdrop. Many institutional positions were established into $52,000 to $58,000 range during the first quarter of 2026, which means those holders were sitting on substantial unrealized gains as Bitcoin rallied through the spring. When the macro picture shifted, so we had rising treasury yields, changing Federal Reserve rate expectations, those investors simply got logical reason to lock in profits. Selling a winning position into exchanging environment is disciplined portfolio management, not a stampede for the exits. So when you think about it, those guys were just simply sitting on huge gains. So the second macro picture shifts for them, they have no reason to hold the position anymore, and they have all the logical reasons to sell some of their position. Not because Iran scared them, but because they were sitting on profits already, and simply these expectations, these war headlines, everything in the whole entire macro picture gave them the excuse to take their profits. And every trader does this, so there is nothing to be surprised about right here. Now, the last point was actually very interesting. You can see that right here we have an article, can BTC Whale save Bitcoin after 4.06 billion ETF outflows? Well, we can see that they're talking about here that we have a 7 consecutive day of net outflows. We have redemption that has persisted. But the interesting thing is that we can see that every time we have reached $60,000, whale activity has been spiking up. So whales continue absorbing supply while exchange balances remain constrained. Downside pressure could gradually ease. Still, broader spot participation must strengthen before Bitcoin can convert accumulation into sustained recovery. So this is definitely the most interesting thing, because we can see while Bitcoin has dropped to below $60,000 for a short time, we had recorded over 6,000 transactions which were above $100,000, 1,000 transactions exceeding 1 million, so marking its second largest spike in 2 months. This response suggests larger investors view this correction as an accumulation window rather than a signal to reduce the exposure. So definitely very interesting thing to see that whales are coming back and they are actually stepping up to protect the price. But the most bearish point right here is that we see that long-term holders are entering capitulation. So whale accumulation reflects growing confidence among larger investors. However, long-term holders are not responding uniformly to the recent market weakness. Long-term holder Soper has moved deeper into negative territory, indicating some seasoned investors are now realizing losses after Bitcoin repeatedly traded below $60,000. The monthly average has fallen from 1.03 to 0.8. That would indicate about a 13% loss for long-term holders on their investment over the last month. So not only are whales stepping up to try and protect the line at $60,000, they're basically doing this in the meantime while they are sitting at a loss themselves, which is honestly crazy. So what the situation looks right now for Bitcoin is honestly that we're doing everything that we possibly can to protect this $60,000 range, and I honestly think that we do not have enough fuel to do this, in my opinion. I think that we will be breaking through this, and once we do, we are going to be going down to $50,000 for Bitcoin, and that's okay. That's the correction that we need, and honestly, if it does happen, we will have even better points of entry for Bitcoin, because as we all know, this is the future of money and this is never going anywhere. So if you have any money that you can allocate towards this, well, then no matter what price Bitcoin is trading at right now, it's still a super insanely good entry. So I believe that yes, right now liquidity conditions and the whole market sentiment, macro sentiment, is not going to be allowing Bitcoin to trend up. I think that we are currently holding the line at $60,000. We're doing it desperately. We're doing anything we can to, of course, try and ease the selling pressure, but I think we will finally break through. We will drop to $50,000, and once liquidity conditions start to improve, once we see any positive catalyst showing up, like rate cuts or any liquidity injections in the markets, well, then I honestly believe that this will be the time that that catalyst will shift us up and we will be starting to see some positive price action. It won't be the war. It won't be any other bullshit that I see on headlines. It won't be the Clarity Act. It won't be any other bullshit, right? It'll entirely be a liquidity constraint issue that we're facing right now. And once the macro and liquidity conditions improve, this is the time that Bitcoin is going to be improving as well. Because honestly, right now, owning Bitcoin and holding Bitcoin is just simply unprofitable for a million reasons.